Welcome to Telltales. I'm Mike Nicoletti. Every week, along with my co-hosts Jason Wallace and Hunt Lawrence, we bring you the cash flow memo. Get it at telltales.us. For the next 30 minutes, we're going to dive deep into energy, technology, and healthcare. So download the memo now and get started.
The following conversation is intended for informational purposes only. You should always do your own work to determine if an investment is suitable for you.
Exhibit A, B, and C, we can do in under 5 minutes, I think. The situation has not changed at all in Iran, I don't think. And I think the price of oil in the $70 range is about as low as it's going to get. I don't see any agreement with the government or the consensus government or whatever it is in Iran that will create unlimited passage through. One of the is that 20 million barrels of oil products, LNG, is accepted that was moving before bombs and missiles started to flow in late February. Let's just take the crude part of that as probably 12 to 13 VLCCs a day. VLCCs at 2 million barrels, so 6 ships get you up to 12 million barrels of crude. Now the product tankers are smaller to move jet fuel or other products, and then they're LNG. But I think one of the reasons that the market seems better supplied than it was, than some people predicted, you don't have to move too many VLCCs to keep up supply of oil from the Persian Gulf. I forgot to update pricing last week. If you turn to the bottom of B, that 27 price for oil rather than 70 would be 67, and the current price would be around 70. So that's only $3 backwardation. Consider how high that's been. We had $90 at one point for the near month, $75 for 12 months from now. So the backwardation is really out of the market. Gas is still hanging in there. This hot weather, which is going to impact us all in the Northeast over the weekend, is very good news for gas because power goes up, gas price goes up, and power prices are definitely up. That's what happens when you've got a spell of heat like this. Power prices, which might be trading for 3 or 4 cents per kilowatt, will trade for cents or some ridiculously high number. That's just the way the power market works when it gets stressed. You get this kind of temperature. U.S. government revenues and expenses, which is Exhibit A, nothing really to report here. I do believe that, as we discussed last week, there will be a problem. I think the problem will not happen before the midterms. While the Republicans are projected to lose the House, maybe have the Senate with a possible loss, I think the Republicans are going to do better House. I don't know whether they'll hold it, but you have this overall goodwill with the World Cup. And remember, we have the Olympics coming, starting in just a few weeks from now. And frankly, the economy looks pretty good. The jobs numbers have been pretty strong. The Fed might have increased the Fed funds rate, but I think with $70 oil and with gasoline prices and heating oil prices and whatnot coming down, I think that's a little less likely. More likely, and I don't think the Straits of Hormuz will be completely clear. Remember, it's not just whether the sovereign oil companies want to ship the crude or whether the tanker owners want to do it. It has to do with cargo insurance. A VLCC carrying 2 million barrels empty is probably worth $30 million. The 2 million barrels at 70 is worth $140 million. So these cargoes don't work unless they're insured. Now, some of the purchasers like China can self-insure. Sovereign oil companies can self-insure, but basically how clear the straits are it's pretty much up to the people that write the policies for cargo insurance. And I just think drones can happen anytime. Get a tit for tat. There's two channels, one over near Oman, another channel over near Iran. And if you go in the channel near Iran and I don't know whether you have to pay a bribe, but you have to certainly collaborate with the Iranians. That's likely to go through. Iran objects to the use of the channel over on the Oman side. And that's where they had a cargo ship take a drone in that bridge area. It's where a tanker was hit again in the bridge area. I think that easternmost channel, or that westernmost channel along the Omani coast, is patrolled not by Navy ships, but by helicopters. Turns out helicopters are the best way now to confront the drones. It's a helicopter. Drones only go about 100 miles an hour, about 500 feet or so off the level of the Gulf, water level, or sea surface level. And so it's hard for radar to see them. And they're very slow moving. A helicopter able to fire machine guns at the incoming drone seems to be the way to control that channel along the Omani side. At any particular time, Iran can decide you want to put some drones. Then what we do, we send in missiles and airplanes with bombs, and we bomb Iranian facilities along the coast. It's a pretty long coast along the strait, and there are all kinds of targets there. And then the Iranians put a couple missiles and certainly quite a few drones in Bahrain. In response, they seem to have picked Bahrain and Kuwait as being states where there are U.S. facilities where they don't have other complications, such as they would have with Saudi Arabia or with the Emirates. And of course, Bahrain is where the U.S. has a long-standing naval base. That seems to be the status quo. Expect that to continue to be the status quo for really indefinitely. Just in terms of other macro events that affect the oil market, the Iran's gotten all the attention away from Ukraine and Russia, but Ukraine and Russia, again, just seems like a stalemate. Once again, drones are very important, but Ukrainians seem to have an edge, and they're certainly reaching into Russia. There's in the oil press, there's lots of articles probably originating in Russia about fuel shortages and whatnot, because the drones seem especially effective flying into facilities and refineries that are generally operating at a fair amount of heat, pressure, and whatnot. So if you put a modest-sized drone into one of those towers, it generally creates a big fire. That's certainly creating pressure on the Russians, and of course their response, it's a little bit like the tit for tat between Iran and the U.S. Their response is to put more drones and some missiles into facilities, including civilian facilities in the Ukraine. So there's civilian loss of life in eastern Ukraine, where Russia's avowed aim is to basically assimilate all of eastern Ukraine, which is Russian-speaking for the most part. And they haven't been able to do it from a military point of view. And based on the people that assess these things by satellite photos, whatnot, Russia's actually lost ground over the last several months. So it's an impasse. It's hard to put your finger on anything that's going to change the impasse. In terms of the impact on the oil markets, this was reluctant to put sanctions on Russian oil because we were having to cope, or the Trump administration was having to cope with $4 gasoline. I think that the U.S. position is to somehow be fairly even-handed between the Ukraine and Russia, even now that gasoline prices will be coming down. The price of oil is, whether it's Brent or WTI, is flattened out by 70 range. So I don't think it has too much impact on the oil market. And it's terrible loss of life and property and whatnot, but there doesn't seem to be any particular think that can be done from the Russian side, the Ukraine side, to change the status quo. Taking way more than 5 minutes. I apologize. Mike, Jason, anything more to add there?
Yeah, Venezuela is not a large market for oil, but they had that quite large earthquake.
That was
Sure, impacting a little bit of impact there.
No question. Venezuela oil's interesting because it's very heavy. And there's also Mexican oil that's available that's very heavy. And along the U.S. Gulf Coast, the refining market over decades is set up to process that heavy crude. And so there is a ready market for any increase in production in Venezuela and continuous production of via the heavy crude Mexico. And it's pretty well integrated with the large, very complex, and naming they have a lot of capacity to convert heavy oils into lighter products, gasoline, jet fuels, and distillates. That will continue to progress. And it's sensible logistics, and it's good for netbacks to Venezuela, it's good for netbacks to Mexico, and it means our refineries along the Gulf Coast are way more efficient. So all that is to the good. Last Wednesday, we decided to focus on some of the security issues with language models. And to tell you the truth, Mike and I talk 20 minutes every morning, didn't do too much discussion during the week. And I'm sure Mike and Jason, who office together, have done some back and forth, but I'm having taken way too much time on these macro issues. I think just over to Mike and Jason to cover that aspect of what we promised last Wednesday. So over to you guys.
Yeah, the development between last week and this week is it sounds like the White House will, one, they're going to continue to restrict access to the latest models, as they've done with OpenAI's latest. But they will, it seems like they are going to allow access to Anthropic's Fable 5 model shortly. Is it today?
It was announced
maybe?
today, yeah.
Yeah. So presumably over the last week or so, the Anthropic has beefed up the guardrails on the model so that it's less likely you can, what they call jailbreak it, or get it to provide you answers or hack systems and that kind of thing that they're actively trying to prevent you from doing. So it's interesting. These companies have the regulatory capture they wanted. They've argued for years now that this needs to be heavily regulated, and essentially they're creating cyber weapons. And now that the regulation has come, they complained about it. But in reality, we're talking about a couple weeks long delay in releasing these models, and that's not that big of a deal. So I don't know. I don't think the delay does anything. So
Do you think it does anything to open source?
no. What's open source doing? They're distilling these models. So
Yeah. They're doing some of their own training, but there's definitely distillation happening.
yeah.
Well,
Presumably the guardrails are being built anyway. They have to build them, and maybe they just take an extra month at the end and build the guardrails in place as they should have in the first place, and then announce the release then. So it appears that there's no delay going forward.
Yeah. The risk is that somehow the Chinese models get ahead of the US models if we are slowing things down enough. And I don't think there's that much of a risk of that today.
Everyone we've spoken to doesn't believe that. So
how much do the two of you use Chinese models, or people like you that you come into contact with on a daily or weekly basis to save money or to build things?
I don't use them.
Open source. Yeah.
Yeah.
Mike's explored.
Yeah, Jason wouldn't touch them with a 10-foot pole. I have played with them on sensitive things, and basically what I've been able to do is get my token consumption under control enough that I don't need to use them. Part of that is defining which models you want to use for certain tasks. We have a lot of recurring tasks now that we're running, and some of those will run on Sonnet or Haiku, for example, within Claude, rather than Opus, and they're far less far more token efficient. That said, our workloads are very small relative to the value that it provides, where if you're running a software company and you're serving many users, you may have workloads that are very large and very dependent on LLMs. So you would be foolish not to try to benchmark and see what the difference in performance is if you were to switch off of an Anthropic model or ChatGPT model onto a DeepSeek or one of these other ones.
But Anthropic's not sitting still. They've recognized this. They know this. And the evidence is this week they released what they're calling Sonnet 5, which is a 2-generation-old model that they've upgraded. So the promise is that when you, at the highest level of effort that you can set these models to, it approximates the mid-level of effort from the next generation up. And they didn't raise prices, I don't believe, on the model. So you can pay very low token costs and get higher quality output now.
Right. These multi-tier models is a pricing strategy, really, at the end of the day. And I think that will become more obvious over the next 6 months or so. You could already tell within the ChatGPT application, for example, it will default to automatically selecting the model. That is going to happen both within an ecosystem like OpenAI or Anthropic, and then also through a router that would maybe be model independent if you were building an application that wanted to route queries to different models based on the complexity of the query. So there's different paths for different people. I think all of this is net good. It actually is rather validating for the whole AI build out. Maybe we should talk about that a little bit. Like data center build out, $100+ billion in debt that's been issued for hyperscaler capex backing that. Oracle has had a very bad quarter. I think I read something saying that it was the worst week on record, and since 2001, since the financial crisis for Oracle.
I did see that they posted their annual report last week, and the risks section was quite large in discussing all the ways that AI can go wrong and that customers won't be able to afford it. And specifically, their largest customer is OpenAI, and we've talked about how they have a very large amount of commitments and questionable sources to fund that. Gavin Baker does a really good treatment on the cost of building data centers, and it's worth looking up his research and podcast he's on. But a couple things that came out is he's estimating now that the memory cost for building a data center is going to be 30 to 40% of the expense of building the data center, which is enormous. And the overall expense of building a data center, an AI data center, is going to be 65 to 75 billion per gigawatt. So that's up from the 30 to 50 figure we had last year or earlier this year.
Yeah, months ago.
Yeah.
It's making the data centers in space argument starting to look quite compelling.
Where is the cost, though? In a 65 billion per gigawatt, I don't believe the power cost and the other infrastructure is more than 2 billion, 2.5 billion. So the rest is all in the servers and the GPUs and the memory chips. And where is the way to do it for less? I guess Google would say they're TPUs rather than NVIDIA chips. I guess Amazon would say the same thing. I don't know that anyone has an answer for memory, because the three big memory producers, Micron and then the two Koreans, had fairly low capital budgets, and they can try to build more capacity now, but it's 28 or later when that capacity will be available. So there's just this huge shortage of memory. But what can be done to get that 65 billion to a lower number?
I think you only have a couple of knobs to turn. One is the labor, and two is the time. So the time is a function of how long it takes to build these things, permit these things, build these things, get power there. And the labor is just the inflation that's occurred as a result of increased demand for this types of infrastructure building. So the long shot space-based data center argument is pretty much wrapped around those two things, right? If you can put the data center into orbit faster, requiring regulation, and you eliminate a lot of the cost, then at some point this thing pencils out. And we've done a little bit of work on that, but you're also dependent on the rest of it all working as well as forecast.
Yeah. And no one is immune unless SpaceX does create their terafab and make their own chips, but no one's immune because you can't avoid the memory prices. And TSMC is rumored to be taking price, which they've historically not done. Mm-hmm. But they're in a position where they can.
So back to Oracle, the argument for Oracle is that the replacement cost on what they've already put in place today or have contracted for is much higher than what they've already spent. So maybe the levered bet on OpenAI isn't so bad because it doesn't have to be OpenAI that's the customer, as long as there is a customer there at the end of the day.
Jason, healthcare. We can't go a whole 30 minutes or 35 minutes without doing healthcare.
Yeah.
I've got to update the Pfizer page, and Pfizer is so incredibly cheap. I guess it's just patent cliffs.
Yeah, I believe so. And it's been a little while since I've taken a look at them and how they're dealing with that situation. So maybe I'm overdue to look at that. But yeah, they had a lot of revenue that was going to roll off patent last time we looked at them.
I know Slantia said they'd come back, which you guys were disappointed in them and probably still disappointed, but it looked like they had a little bit of an uptick.
Yeah, their prostate cancer imaging tools decline in sales has stabilized. And that was a lot of it, along with hope of the Alzheimer's imaging agents, which still aren't approved, but decisions on that should come later this year. They did get a recent rejection letter from the FDA, and the reason it did not impact the share price is it was related to their manufacturer. So the controls at their third-party manufacturing facility weren't up to the FDA standards. So now the process is they have to get better controls on the manufacturer and resubmit the application, which and the FDA did not say anything to the efficacy of, or the lack of efficacy of that diagnostic. So presumably, once they get that in order, it will receive approval. But that does lead into a pilot program that the FDA announced earlier this week, or maybe it was late last week, called the PreCheck program. So nothing to do with TSA and flying, but a pharma company can submit their manufacturer for FDA review ahead of time so that the FDA can look at the controls at the third-party facility and pre-clear it. And part of the program is pre-clearing a handful. I believe they picked 10 manufacturing sites that they're going to pre-clear and say, if you make a drug here or diagnostic here, we've gone a long way already to checking them and making sure that they can follow the procedures. The goal is to, again, compress the timelines towards approval and hopefully eliminate situations that Lantheus found themselves in today where they have a rejection letter, not due to their own fault necessarily, but the manufacturers.
Nice. BioNTech just seems slow to get any revenue going. Moderna seems to spend a lot more money than BioNTech, so BioNTech's still sitting on their cash. And Moderna's getting to the point where they've run through most of the cash they made from doing COVID vaccines.
Yeah, they have a lot in the pipeline.
Yeah. Vertex is continuing to progress, but their drug, their non-opioid painkiller, seems still a little slow out of the mark.
Yeah, we have seen indications that the sales are ticking up in the last 2 months or so, but definitely it's slow out of the mark. They had to get reimbursements and payers on board, and they're still working through all that.
Yeah, I think you'd sum it up and say that the S curve of adoption for the product is less than what was hoped, given the positive benefits of being a non-opioid product. Mm-hmm. maybe we were, and a belief that physicians wanted something that was non-opioid, we would have expected a steeper S curve.
Yeah. Yeah.
Yeah.
And then Lilly, one of our companies, is, I haven't updated this, but they just seem to go from strength to strength, both on their weight loss medicine, where they just seem always to be a jump ahead of Novo, and then just new medicine.
They have a non-obvious strength that they're a muscle they're flexing recently is related to the 340B program. So what that is, originally it was outlined to allow rural hospitals with less resources to purchase drugs from a manufacturer at cost and then resell them at normal retail rates. And that was to ensure that patients in the rural communities had access to these drugs when the hospital is resource constrained. Since that was enacted 15 to 20 years ago, I think virtually every hospital is on board now, and they are claiming the need and purchasing drugs at wholesale costs. The stat I saw was that 16% of all drug sales in the US are going through the 340B program. So it's really a revenue driver now for hospitals versus what it was originally intended for. And Lilly started fighting back earlier this year, or maybe it was late last year, and said, we want to see proof that your hospital has the need to be able to purchase at cost from us. And obviously a lot of hospitals pushed back. And Lilly said, the spirit of the law is this, so we're demanding that, or we're not going to give you a rebate. And they started doing that last month. So there's been lawsuits filed, but ultimately Bill Cassidy put forward some legislation this week that revises the 340B program, and it standardizes what manufacturers, the data they can ask for from the hospitals, but I believe also requires them to provide it. So the hospital organizations are really against it because it will be shown that they don't necessarily have the need, and this is just a profit center for them.
I'll also mention that the last time we mentioned this program, we don't get a lot of comments on our episodes, but a mouthpiece for one of these organizations that's tied to the hospital system was bashing Jason about his comments about this. So it'll be interesting if that happens again.
And then Jason, Mike, and I were talking this morning, and you've got a potential litigation issue on the early history of Harrow that's a little worrisome that you're using for people on the phone who doubt that people like Mike and Jason use language models and AI tools. You're deploying these tools to figure out exactly what the extent of this might be.
It's doing a good job at investigating and pulling together the data. We are consulting actual lawyers as well.
Yeah. So this is one that's been working its way through the system for a while, but I guess the long story short is that it likely will go to a jury trial, which jury trials are never what you want to have as the outcome as the defendant in a product liability case. I don't want to go too far into the weeds on this because we're still kind of sorting it out. The trial date is set for December 7th. So we have some time to kind of sort through what the implications would be. But for those that are interested in Harrow and have been following the story, you're aware of the fact that the company really started as a compounding pharmacy and grew into becoming a branded pharmaceutical company. So this trial is related to one of those compounded products that they've sold. And basically, long story short, is this patient lost vision in her eyes, and they've sued both the surgeon that performed the cataract surgery and named Harrow in the suit as well.
The obvious issue is, are there other claimants out there?
Mm-hmm. Yeah.
The people that bring this litigation are pretty good at hunting these people up.
That's right. And we've done some analysis on some of that. As of right now, we don't have any indication that this is likely to be a bellwether case. But if a case is successful, you inevitably have others that will want to get in line. That is the way plaintiffs' attorneys work.
Jason, we haven't mentioned, Mike and I haven't discussed, but about an hour before we started this call, I thought to myself, it's the middle of the year. So I think we do our predictions every 6 months, don't we?
I think we update how we're doing. It'd actually be much faster to go through that today than it was 6 months ago, because we could just put our Claude agents on it.
Yeah.
So yeah, that would be fun to refresh and see where we're at.
So next week we'll all be embarrassed by how poorly our predictions went.
Very likely.
Yeah.
So certainly, if anybody picked a hyperscaler for having more cash flow, that would be
yeah. That'll be a disappointment. Hopefully, also next week we'll know that the U.S. men's soccer team is still in it, but to be determined.
Oh, I should also say Happy Canada Day.
Yeah, absolutely happy. Yeah, exactly. And we'll be here exactly 7 days from now. Everyone be well and stay healthy. And thank you very much for listening. Take care, everyone. Bye-bye.
The views expressed on this podcast are the host alone and do not constitute an offer to sell or a recommendation to purchase or a solicitation of an offer to buy any security nor a recommendation for any investment product or service. While certain information contained herein has been obtained from sources believed to be reliable, neither the hosts nor any of their employers or their affiliates have independently verified this information, and its accuracy and completeness cannot be guaranteed. Accordingly, no representation or warranty, expressed or implied, is made as to, and no reliance should be placed on, the fairness, accuracy, timeliness, or completeness of this information. The hosts and all employers and their affiliated persons assume no liability for this information and no obligation to update the information or analysis contained herein in the future, and may or may not hold positions in the securities mentioned.